Hello guys. 5 things if you do, you will have problems in your account, or what you call trading account. If you are a beginner, here I'm always speaking about beginners who just begin to trade, or they have never traded, but I'm telling you the 5 things, and then at least you will be aware of them. Now, the first one is obvious. They say obvious, but it's not obvious for me. The first one is you don't know how to trade stocks. Although all the people know that if you don't know how to trade stocks, you will lose money or you will wipe out your account in 6 months or 1 year. Although the people, they know, but they don't take training. Now, training makes the whole picture for you to see what are you doing. Okay, this is the importance of getting a training. It shows you everything you want to need in order to trade. And when you trade, you will be confident, okay? And you understand what you are doing. You can change that, change everything from the strategy according to your opinion, okay? When you understand something, you can change. But staying with getting information here and there, what we call reading books, it can help, but it is not the books. They don't give you a direct strategy, what to do, how to buy, how to sell, when to buy, risk management, position sizing, and the other stuff. Okay, how to search. They don't give you that. They give you a general thing about risk, about indicators, about, and these things, it will never help you, because indicators and moving averages are what you call lagging prices. It means old prices. They don't tell you the future, because nothing will tell you the future. Okay, it's not something that you can rely on to do your trades or to invest. Okay, so this is the first thing. You don't know how to trade. Now, what is the solution? You just get to training. Okay, in this I give these days I give 50% of my training levels by videos, just to help everybody here. Okay, just give me 1 minute to drink some coffee and then I will continue. Okay, the second thing, don't trade derivatives when you are a beginner. Now, what does it mean, derivatives? You have seen them online. Derivatives are something, a product that Wall Street have. It has a relation with a stock, okay, or with a product, but it is not the product itself. For example, options. When we say options, I always say greed. Wall Street guys, they tell you, oh, I know that you can't buy a stock which is $10,000. Okay? But you can buy it with 1,000, right? You have money. Oh, you say, yes, I have money. They say to you, oh, you can control $10,000 just by having 1,000. And this is greed. How someone, okay, in real life, try to understand this, in real life. How can you have 1,000 and you think, someone tells you, no, your 1,000, it's not 1,000. It is 10,000. Okay? Do you believe that? I know you don't believe. In real life, it means when you are in real life, okay, you have 10,000 in your checking account or in your saving account. You have 1,000, but your bank sends you a statement. It says no, the value of your money is not 1,000. It's 10,000, but it is not 10,000 in real. It's just a value that we think that your 1,000 is. But in real, when you want to take the money, you find it only 1,000. This is the game of Wall Street. That I have made videos and I explained to you the game into details. But in this time, I want just to tell you, these are all what you see online is products of Wall Street guys. And Wall Street guys, when they initiate this product, which is called options, they're not stupid. They want your money so quick. They don't want to wait that much. And because you have greed, and you want to control 10,000 with 1,000, see what will happen to you. Now, you buy, let's say one contract of options is $1,000, but the stock is $10,000. Okay, this is the stock. The stock, it means that the money that you bought the contract, which is 100 shares, is $10,000. Which is, what does it mean? It means that the stock is $100 value. The stock is $100. Now, you buy only 10 shares and you control 100 shares. Okay? Now, why Wall Street give you this option product? Do you think they are stupid to give you $10,000 for 1,000? Do you think that these guys who control America and the whole world are so stupid to give you this? It's just because there is a trick. They tell you if the stock goes up, you will get some money, percentage from this 1,000. 10%, 20%, 30%. And when you think, oh, you say, I'm getting 10%. I'm getting $100 for 1,000. Oh, it's good. It's good. I'm getting 20%, 30%. It's good. But what if the stock goes down? Here is another calculation. Man, you have lost $700 from this 1,000. Okay? You see the game? The game up and down, they are not the same. And you will never, how do they calculate this? Because it's Wall Street. They do algorithm, they use math in order to make everything for you go to zero. That's why some people who are into options, they wipe their accounts quicker than stocks for the beginners. That's why if you are doing options and you are just a beginner, believe me, you will be losing all your money in a few months. You don't even stay 1 year. Okay? It's just because Wall Street guys, when they do a product, they calculate everything in their advantage. It's not for you to make money. It's for them to make money and to take your money. Now when you say to me, but what we can do? Why we have these options? Now options are for if you become professional trader. If you train yourself and you get a training, and then you become professional trader, and then at that time you calculate risk and you understand the ins and outs of options. At that time you can begin make money, but the risk is so high. Okay, some people they live with that. Okay, and a lot of mutual funds, they use options to help them back up their investment. Okay, but they lose that money that they do. Okay, in order to back, if the stock goes up, they lose that money because they go down. Now, other things, derivatives like futures, like forex. Okay, now forex, which is called currency pairs. Mostly, who are trading there? They are the big banks, the giants. So the stock, the pairs go so high very quick and goes so high down. So the volatility is so bad that you can lose all your money and you be in debt of this forex. And other for the futures. It means people who are going there mostly are professional. Okay, working with banks, working with mutual funds, it's something that needs a lot of money. And if they succeed, they can make a lot of money. If not, they will lose a lot of money. But for them, they are playing with other people's money. Most of these guys, mutual funds, hedge funds, they are playing with other people's money. It's not their money. Okay? So if they lose, they get their money. Because he's a manager, he gets his money, and it's too much money for him. Okay? And I told you the other year how much one of the mutual fund has made. $3,500,000,000 in 1 year. This is when a guy like these guys, how much he will make from the percentage he take from the fund. And the fund is the money of the people. Okay, it's not his money. So he gets just the profit. Now, so avoid this derivatives, options, forex, and futures when you are a beginner. Begin with a stock, learn the stock, understand the mechanic, and then you can go and do day trading for this options or forex or futures. Okay, most of the people who work there, they do what we call day trading, because the money goes very quick up and very quick down. That's why you should have money. Okay, it's not for the people who have 500, 1,000, 10,000. They go and do this because they will wipe their account in a few months. Now, when you master the stock trading, you can go directly to whatever you like, forex or futures or options, the thing that you like and you are comfortable with, and then you make a career there. Okay, if you don't like stocks, because stocks, okay, it grows slower than than options or forex or futures. Okay, now this is the second thing we have spoken to. Let's make some coffee. The third thing I'm speaking about, which is a very dangerous thing, is shorting stocks in swing trading. Now, why I say swing trading, I don't say day trading. There is a big difference. When you short a stock in a day trading, you are in front of your desktop and you see the price where it goes. So you control the price. You can exit at any time. Now, let's say you want to do swing trading and you do shorting the stock. Okay? If you go to my training, level 11, how to sell short a stock, you will find a complete training for day traders and how to do it. Okay? Now, let's say a stock is $20, but it was $30. It goes down. You say to yourself, this stock, they say bad about it in online. It's a bad company and it is losing money. The analysts are against it. They say, no, this company, don't buy it. To go long, it means to buy it for investment. It's the worst investment you can do. And the stock was $30 and now it is $20. So you say to yourself, why not I short this stock from $20? It can go to $10 and I make 100% of my money. This is what you think. Now, the next day, in the morning, we have earnings and they say this company has doubled its money in 3 months. I don't know how, but it doubled its money because the company gives the information. Either they lie or they don't lie. This is the good thing about investing, is because sometimes the company executive lie. Okay? They lie because it's in their own interest. For example, an executive has 10,000 or 20,000 or 50,000 shares, and he gives that good news. The stock skyrocket, okay? Because Wall Street guys, they buy it and they make money from it. In the next day, the stock from 20, you find it 40. $40. Just you, as I told you before, another video. Don't be surprised. Then you find your stock from 20. Next day, or after a few days, I'm not saying just next day. This good news, the stock double. Do you know what will happen to you when the stock double and you are shorting it? You don't know what will happen. You lost double your money. Let's say you put $10,000. You are losing $20,000. $10,000, it's your money that you put into the a trade, and you lost another 10,000 because you should buy the stock at 40 in order to give to your broker. Now, a broker in the morning, when he saw that the stock is 40, you get what we call a margin call. A call. They call you, man, you lost double your money. Please give me my money now. And they give you only 1 day or two. You say, if you don't give, you don't give. We will see later what will happen to you. Okay? This is shorting in swing trading. That's why when you are a beginner, don't play with these things. Okay? Don't play with shorting in swing trading. Never. You are a beginner, stay away from trouble. I'm saying this, not someone later. He told me, oh, I swing trade this stock and I short it. It was $1. Now it's $10. You go to prison with that. Okay? Those people who don't understand the biggest dangers, what is going to happen to them. You will be in debt. Okay? You will be in bankruptcy, in real bankruptcy. And that's why a lot of people, they go bankrupt. A lot of big traders, even big names, they have been bankrupt for this because they do something which is so dangerous because of the greed. Okay? It's always greed. So, if you are a beginner and you want to do short selling or selling short a stock, what you should do, you do it in a day trading from 9:30 to 4. You just play. Okay, you short a stock. If it's going down, okay, you make money, little money, or you don't, and then you close before 4 o'clock. Before. Because if you stay after the market close, the bid and the ask will be wide and you will have a big problem. Okay? So I think that you understood right now how difficult and how dangerous is short selling in swing trading. Now, if you want to do day trading, I know you want to try it and to use it. Maybe you make money from it and you know a lot of stocks that go down. Okay, it's okay. You can go to my training level number 11, which is how to sell short stock, and you just get to learn the mechanic of this thing. Okay, it's easy in the way it is done. It's easy. It's the same. It's the opposite of to going long. Either you buy and you sell. In short selling, you sell and then you buy because you borrow shares from the broker. You give it back. Okay, and be careful. Okay. Let's drink some coffee before we go to the other thing. It's so delicious, this coffee. This is my second cup. Okay. Number 4. Risk on one position trading. What does it mean? Let's say you have a $10,000. This is your account. And you always buy one stock at a time with $10,000. This, in terms of money management, is wrong. Now, why it is wrong? Because if you lose 10% to 20%, you lose a big chunk of your money. And you tell me, for example, oh, you can make money. Yes, you can make money, and your account can go faster. But I understood, since you are a beginner, I don't think that your account will go so fast. So most of the people, what they do is they divide their account to some positions, and each time they buy one position or 5 positions, wherever, at least you will not get hit with this one position thing. Let's say you got caught into a gap down. What will your position? Let's say the stock was 50 and today is 25. You wake up in the morning, it's 25. You lose 50% of your money. That's it. Okay? So in order to avoid this big risk, okay, try not to put all your money into one position. This is money management, but I'm telling you, and in my training levels, you will find how to minimize risk and how to maximize profits. You can just check that. I think it's training level 8. Check that, and you can just understand the mechanic of it. Now, let's have one sip of this coffee, and then I finish with the 5th one. This is what the beginners like. Is when they buy a stock, it goes against them, and they hope it goes back to get their money, only because this is the psychology of the trade. When you buy a stock, let's say at 50, you don't put stop loss. You don't have any idea about risk. It's just like a beginner. Totally a beginner. You say, man, I know this stock will go from $50 to $100 in this year. I'm putting all my money there, and I will wait. Because maybe you have read an article about a guru in trading or investing, and he told you that this company, this year, it will make a very good success because of this and this and this. Because they give you those stupid reasons that always investors, they try to rely on. That the company is big, the company is famous, the company makes one special product, the company is successful, the company has been 100 years in the market, the test of time. They give you all these stupid things that the investors are using in order to make money. Most of the time, they don't make money. Okay? Now, the analysts who say this, they don't risk, because they just tell you, oh man, this company is good, buy it. They give you reasons, stupid reasons. You find it in any other guy who is an analyst. They use the same thing. This is the good thing. They use the same stupid things, and they ask people. Understand that these people are paid to tell what they tell. They are not, I'm not saying honest, but they do their job. Their job is to get paid to tell what they say. They give them paper. They say this. Our company is good. We want you to tell good things. Here what we have, and you can add other, you can invest, and you can investigate and add other criteria that are good for your company. At least people will buy our company shares, and our company becomes bigger and bigger and bigger. Now those executives, when the company becomes bigger and bigger and bigger, what they do, they sell a lot of shares in order to get that money. Instead of the stock is 50, if the stock goes to 70 or 80, they will sell a lot of shares because they will get more shares for free. Understand that the executives are getting bonuses. How do they get bonuses? They can get it in cash, or they can get it in shares, thousands of shares each year. Okay? So they make a lot of money. Now, you buy the stock at 50. It goes the following week, 1 week, 2 weeks, 3 weeks, it goes against you. Okay. What is your main concern? You see your money is shrinking. 50, 49, 48, 45, 42. Okay? You are losing money and you go to your account and you see in a big red because the broker wants you to know. That's why he put a big red number. If the broker has no green and red color, please ask him to show you where to find these colors and you put it in your account. At least you understand where are you going. If it is green, everything is okay. You are happy, the broker is happy, everyone is happy. If your account is in red, understand that you are losing money. But you don't know how much you lose, although you see it in the numbers, but you don't believe. Now, what is your main concern? You say to yourself, see, I want to stay until the stock goes up to 50. And then I will sell. I will not stay, because you think that if the stock goes up to 50, at least you don't lose money. And you have this false idea in trading or investing that in each trade you do or in each investment, you think that you always make money. And this is not true. That's why if you go to training level 5, how to make money from stocks, you will get the solution of this problem. It's not in one trade that you can make your money. It's not trading or investing. It is not a lottery ticket where you scratch the paper that you buy with $2 and you get $100 million. It's not. So that's why I tell you always that trading and investing, it is not gambling. It's business. You should know what you are doing. You should do a portfolio. You should do a lot of things that I explain in my training. At least, if an investment is bad, 1 or 2 or 3 are good. So you can make your money up and have a profit. This is what most of the people do. This is what the mutual fund do most of the time. Okay? He can't rely on one stock to make money in the market. That's why he buys a lot of stocks in his portfolio. And each manager buys either the same or the opposite, or you can find this online. If you buy mutual fund, you will find the stocks that the manager has bought. Okay? So your main concern is that the stock from 42, hopefully it can go to 50, and then you sell. And then at least you will say, oh, okay, I bought that stock, it goes down, then it goes up, then I sell it. I'm not losing any money. As if you know the future. And this is a real problem that will cost you too much. Just today, someone sent me an email. He told me, I have my money, I lost all my money. And then he bring other money, investment or I don't know, or saving account or wherever he has money. He give it to someone else to trade for him, and the other guy has lost all his money. You see? So, what is the solution for this problem? Hope. Hope, you should change it or replace it with a plan. You say either it is an investment or it is a swing trading. You should have a plan. You say to yourself, I am buying this stock at $50. If the stock goes up, you don't think about it, because it's going up, you are making money. So it's not, as they say, profits take care of themselves. So you don't worry about this. Don't worry about taking a quick profit. Let the stock go up. But if it is against you, you say, I made a plan. If the stock goes, let's say 2,000, 3,000, 4,000, this is you risk management. You should do it yourself. If you don't know, you should go to training level 6, how to protect your profits, and you do that. Okay, and you understand the mechanic, how you plan for your risk. You say, if the stock goes to that price, I'm selling. I don't think, because I lost that much money. Now here, when you do that, even if you don't put stop loss in physical, you don't put it in your account, but you understand that you put a red line. Okay? You put a green line where you bought, put a red line where you sell, always. That's why I have a free training. It's called How to Use Colorful Lines to Trade Stocks. Always use this green and red. You understand where you are going when you buy and when the stock goes. Okay? Now, I think we have finished this 5 things that will destroy your account if you don't think about it. Now, if you can go to all these 5 things, what is the major thing is you don't know how to trade. So it's high time to take a training, okay? And at least you understand the whole picture. When you understand the whole picture, you can do investing, you can do trading or swing trading in stock confidently. It means you become an independent trader or independent investor. You know what you are doing. And this is the basic of trading and investing. If you don't know what you are doing, let me have my coffee. It's like when you drive a car in the morning, you have a day off, you take your car, you go outside and just drive. You don't know where you are going. You just spend gas like this. So you should make a plan for everything. That's why, in general, the rich people or the people who are successful, they plan things. Now, the people who are poor and mostly, they don't plan anything. They think that success just comes as a matter of luck. Or you find someone who is working a job and he hopes to become rich, and this job will never, if he works 100 years, 200 years, he will never be rich from this job because it's limited. Okay? That's why the people, they do business. Business is open. A job is short-sighted. It means you don't see nothing from this. That's why if you understand the whole picture of trading and investing, you can make it in the future when you plan. This is not only for trading or investing in stock market, but it is in all the business of the world. People who plan, they carry the plan, they succeed. People who don't plan, even if you make a business and you don't plan for it, you don't know where you are going, you will lose by a few years, 1 year or 2, you will lose everything because you don't know what you are doing. And this is a real problem in the human life in general. You find people who are successful, they get money, they have ways to get money, they succeed, okay? And there are other people on the other side, the majority of the people, they are still hoping to buy a ticket, lottery ticket, to scratch it and to become a millionaire as they show it in TV. Okay? In TV, have you ever seen someone teaching you how to do business in TV? I say no. I have never seen someone showing me a way to make money or to do, what to think. Have you ever seen that? No. What about lottery? Have you seen advertisement about lottery each time? Oh, there's one who is winner. He won $400 million. Now, this $400 million, the government will take 60%, mostly 60% of the money. So it's rip off all what you get. And you say, oh, still. That's why if you rely on TV, okay, lottery, that's why the people they stay where they are all their life. You find someone who is doing a job, whatever is the job, okay, he likes or he doesn't like, they stay the same thing the whole life. And you ask them, why, what's the problem? You say, I don't have money. Okay, and why you do this job if you don't have money from this job? Or, okay, because people, they don't plan, they are lazy, and if you continue with this thing, you will stay where you are all your life. Okay, now hope I have summarized all these 5 things that destroy your account if you don't be aware of this. Okay, the training is here if for those who are interested, and please comment or send me emails. My email is always on the top of the description here, on the top of the video. Always just take the email and send me an email if you have some questions, private questions or something. Comment or subscribe to my channel if you don't. And thank you very much for watching this video.